Hey gang, Nate Bear here, lead technical tactician for Monument Traders Alliance and Trade of the Day. And in today's video, I want to go over the SPX. I've got a couple of fresh trade ideas, and man, talk about volatility. We have been lulled to sleep over the past couple of sessions, and today the VIX is back with a vengeance. So let's just dive right in. All right, so the first thing I want to talk about is the SPX. And this is a chart that we've been talking about every week, right? We've got the weekly chart here of the SPX. We've got this weekly squeeze that's fired long, and we are sort of into resistance here at this $4,200 level. This is a level that we've talked about in the past. This is the previous high from the that's the January high of 2023. And today, or rather yesterday, we hit a high of 41.87. So pretty close. Today we're pulling back pretty hard to the 21 EMA. Now, I know if you look at a 5-minute chart, you look at this and say, "Oh my gosh, like this is falling apart. The world is ending. Things are going into the trash can," right? But if we look at this from a daily or even a weekly chart, what are we really doing here? I mean, we're not even close to testing the 55, which to me needs to be maintained for that bullish structure to be maintained. And then we've got a pullback to the daily 21 EMA. That's nothing wrong with that, right? That's normal behavior. We've got the FOMC tomorrow. We've got Apple earnings on Thursday. I think these are really going to be the drivers. I think today is largely being, the markets are being led down largely due to the IWM and to banks and problems with banks, right? So the IWM is down here intraday 2.5%, while the Qs, while they are down, yes, they're pulling back all the way down to the 8 EMA, right? Whoop-de-doo. Not a big deal. We've got a fresh daily squeeze in the Qs, as you can see down here. And we've got the Qs that are down 1%. So just not that big a deal as of right now. So for me, this is an opportunity to look around and be like, hey, it's time to go fishing. I need to see what I can do. Where can I get involved? And I've got a couple of names where I think that it makes sense. The first chart that I want to go over with you is TMUS. And this is T-Mobile. I want to look at this from a weekly chart perspective. And this is a very strong stock, right? I mean, clearly, this is trending in one direction. This is trending higher. So if we look at this weekly chart, I love this pattern. We have this sort of cup, right, and handle pattern, and this really nice weekly squeeze. So TMUS has already had earnings pretty recently, a couple of days ago, and they're having a pullback. So, okay, cool. On a weekly chart, what does that look like? Well, lo and behold, look where they're pulling back, right into that 55 EMA. 55 held here on the weekly, here on the weekly, here, right? This is a great level on this weekly chart, in my opinion, to start looking at longs in TMUS. And because I have a weekly chart that we're looking at here, and full disclosure, I did pick up a position in TMUS this morning. I went out all the way out to June, and I picked up these in-the-money calls right off of that 55 EMA. You could go even further in time. I think it would be totally reasonable to go out even to August and do something in the money, like these 140 calls, right? So that is what I suggest in TMUS. I like those June 140 calls. If you're more comfortable doing something a little bit more out of the money, like the 145s, that's fine too. You could also do a call debit spread where you're buying the 140s and selling the 145s. It's up to you, but I'm going with the 140 calls out into June, right off of that 55 EMA, and that price level, just so we have it, is around 140 and a half, $140.50 or so in TMUS. Another chart here that is going to play out a little quicker is Tesla, and the setup here for me comes here on this 30-minute chart. All right, let me clear the drawings. And we have Tesla with an earnings miss right here. So that gap down is because of earnings. And since then, Tesla's been sort of doing its consolidation thing, sort of trending a little lower. But right here, we have a low. And for me, this is looking very reverse head and shoulders. This looks like a reverse head and shoulders to me. We've got our neckline coming across here. And then you've got your big gap up into 180. So for me, I think Tesla here is actually a long, because as the market falls, Tesla's already fallen, right? Tesla's already fallen. It's one of the names that I think will get some money flowing back into it potentially. So the setup here then is a reverse head and shoulders. We've got a 30-minute squeeze. You could wait for a little bit longer squeeze. You could wait for like maybe a 60-minute squeeze to set up, and I think we're close to getting that. But the idea is to basically try and enter in Tesla around the red line here, which is the volume point of control, which is around 162. So an entry in Tesla on 162, look for the break higher, and then potentially a gap fill up into 180. So again, as far as what trade or what option I would select, and again, full disclosure, I took this trade this morning, so I'm putting my money where my mouth is. But I went out into next week and just bought some sort of out of the money cheap calls in Tesla with the idea that, if Tesla can break over that neckline, we could have a very quick, very sharp move back up into, say, the mid 170s or so, something like that. So that's what I'm looking at in Teslas, along around 162. I would go out to next week, and you can just pick whatever option you're most comfortable with. Obviously, the closer to the money you go, the safer the option is, but the more expensive, right? So anyway, that's what I've got for today. I hope it helps. It's been an interesting day to be sure, and I love the volatility. It provides opportunities to buy good stocks at discounted prices, and that's exactly what I'm out there doing today. All right, I'll talk to you guys soon. Thanks for watching.